Hello friends, today we will cover the topic of NPS, which is covered under section 80 CCD. NPS or the National Pension Scheme is a pension scheme available for government employees as well as private citizens. The government has introduced this scheme basically to inculcate the habit of savings for the purpose of retirement. NPS is one of the most popular options available to individuals looking to create a corpus for their retirement along with regular monthly income. The money deposited in NPS is invested in a variety of securities and investment avenues, including equity market. It is widely regarded as one of the cheapest investment options with exposure to equity. As the returns are directly related to the market performance, there is no guarantee of any particular amount, but over a period of time, returns from NPS are one of the highest in the market. So basically, the NPS was introduced in 2004 for the government employees, but gradually in 2009, the private employees were also covered in it, and this is regulated by an authority. So the regulatory authority is PFRDA for the NPS. So there are two types of NPS, tier 1 account and the tier 2 account. In the tier 1 account, this has a fixed lock-in period until the subscriber reaches the age of 60 years. Only partial withdrawal is allowed with certain conditions. Contribution made in tier 1 are tax deductible and qualify for deduction under section CCD and under section 80 CCD 1B. This means that if you invest up to rupees 2 lakhs in an NPS tier 1 account and claim a deduction for the full amount, that is rupees 1.5 lakhs under 80 CCD 1 and 50,000 under section 80 CCD 1B. This means that if in case you have suppose 80C investments of 1 lakh 50,000, then you can claim additional 50,000 under section 80 CCD 1B. So this is very beneficial and it will help you to save additional amount of your taxes if you're falling into the higher income bracket. Now coming to the tier 2 account, this is necessarily a voluntary savings account which allows the subscribers to make withdrawals as and when they like. In this, you can withdraw as and when you like. However, in tier 1, you can majorly withdraw at the age of 60 years or the retirement age. But the contribution made to tier 2 account is not eligible for tax deduction. So this is a drawback of tier 2 account too. But then definitely if you have a goal based investment of saving for your retirement, then you can open this account. To open a tier 2 account, you must open a tier 1 account first. Contribution to NPS qualifies under exempt EEE mode of taxation, where the amount contributed to NPS, the income generated, and the amount of maturity are all tax exempt. As per the latest guidelines, you can withdraw up to 60% on maturity and need to reinvest the remaining 40% to purchase an annuity that gives you a regular monthly income. We'll cover the few features of the NPS. So number 1 point, the additional deduction of 50,000 is available only for contribution made to NPS tier 1 account. So in case you are investing in tier 2 NPS, then you will not get that 50,000 extra deduction under section 80 CCD 1B. Tier 2 accounts are not eligible to claim the deduction which I have already mentioned. The deduction under section 80 CCD 1B are available to salaried individuals as well as to self-employed individuals. So both the sections are covered, both the sections of people are covered, salaried as well as self-employed individuals. You need to produce documentary evidence of the transaction related to the contribution to NPS. Partial withdrawals are allowed in the NPS but subject to specific terms and conditions. The total exemption limit under section 80 CCD 1B is 50,000 and is independent of exemptions under section 80C. Thereby you can claim a maximum deduction of 2 lakhs. In case the assessee dies, the nominee decides to close the NPS account and the amount received by the nominee is exempted from taxation. If partial withdrawals are made from the account, then only 25% of the contribution made is exempt from taxation. If the assessee is an employee and decides to close the NPS account or opt out of NPS, then only 40% of the total amount is tax exempt. The assessee can withdraw 60% of the entire amount on reaching the age of 60 years as tax-free income. The remaining 40% is also tax-free if it is used to purchase an annuity plan. Section 80 CCD 1B offers you an excellent opportunity to save a substantial amount on taxation liabilities. This way, you can not only reduce your present tax liabilities but also work towards creating a substantial corpus for your retirement. So do keep in mind the above mentioned points before taking or buying an NPS account. So that was all from my end. In case you have any queries, please feel free to drop a comment. Thank you.